Oh man, so the first February data is in, and it's a huge blow for what we were expecting. If you guys watched my video earlier today, we spoke about the need to have really good February data to remind the market that inflation is well on its way down. Well, the first set of data, not just for Europe, but for the US markets as well, have just come in, delivering a major blow. If we first take a look here, you can look at the Germany inflation rate, and that came in again for the second month in a row at 8.7. So January was at 8.7 and February was 8.7. Now, I know we're not focused here on European markets. Bitcoin is much more correlated to the US markets, but it gives us a canary in the coal mine, a clue as to what we could expect for the much anticipating Feb CPI in March. Remember, in March on the 14th, we get the US CPI data. And now that we've seen that Germany's inflation is at 8.7%, this is not great. Remember, we're hoping that the January figures were just a blip on our journey to seeing inflation coming down. But could it be worse than that? Could it be this entrenched inflation? So far, this has led the markets to worry. Markets have panicked since this has come out, along with the data I'm going to share with you specific to the US. It's not a great start, guys, and it really does have us in a little bit of a predicament. 30% of the market now pricing in 50 base points. I do want to put out there, I'm not expecting 50 base points given the data we currently have. I'm going to come on to that shortly, but 50 base points would really dent the credibility of the Fed. So they, in my opinion, will only do 50 basis points if that CPI reading comes out bad on the 14th of March. Let's take a look at here. You can see stubborn inflation will remain at a very high level, says the German central bank president. Okay, fine. So we can park that. We've seen that there's bad inflation continuing into Feb for the Eurozone, but maybe that's not the case for US. But we have had some other data coming. Firstly, starting off with the US ISM manufacturers' prices paid, okay? So there's two things that are going on here. The first I need to share with you, ISM manufacturing PMI edged higher to 47.7 from 47.4. So that's good that it edged higher, but it's still below the expectation of 48. So in other words, the way this works is, think of this as being almost like they go and survey all the manufacturers in the US and they ask them, did you have more manufacturing? Did you have less manufacturing? And then they get this reading. If this reading is less than 50, that means you have seen a contraction, okay? And that is what we're seeing here. So we're seeing more of a contraction than we thought. The expectation was 48. It was lower than 48. Now, the other side is to look at the prices paid, which is the same thing. They do a survey and they ask these business owners, have the prices paid gone up or have they gone down? And you can see here the prices have gone up 51.3 from 44.5. Okay, that's a major uplift. If I jump back over to the charts here, you can see here on the prices paid, this is the highest we have seen since September. This 51.3 is the highest in September 2022. And this is a bad concoction. So manufacturing has gone down. Manufacturing has gone down. But at the same time, the prices have gone up. Does that ring a bell? What does that look like? That is stagflation, right? That is the definition where the economy starts to slow down. Your output, your GDP starts to reduce, but prices are still going up. In other words, still an inflationary environment. So this is a very concerning set of reports. If they were both moving in the same direction, that's different. But for prices to be going up and at the same time manufacturing to contract, this is not a positive start to the February data. So where we're sitting on the fence saying, oh, it's okay, maybe it was just a blip in January, we'll ignore it, we're going to get back on this path. Maybe, just maybe, this is showing us that this could be a tricky period. But, of course, we don't want to panic yet. We have to wait for more data to come in, and that's going to be from CPI that comes out on the 14th of March. We will be covering it on this channel, and this is the bit. If they mess up on CPI, if CPI comes in too hot for the US markets, this could be painful. And if we look at the US inflation headline rate, you can see here we've made a lot more progress than Germany has, right? This is the Germany equivalent chart. You can see they're really struggling around this 8.7, 8.8 mark. US markets have made a much better move here to the downside, seeing it progressively come to the downside. But the worry was around this 6.4 versus the 6.5. Does this mean there's 6% or so of entrenched sticky inflation? This is what markets are concerned about. This is what is stopping risk from fully rotating on right now in the market. Now, the next meeting on the 14th, they're expecting 6.2. This is expected to come down a little bit down to 6.2. If that misses, if that comes in 6.2 or higher, guys, markets will not be happy, and you will see that people more and more will be pricing in 50 basis points. And if that comes in at a miss, the Fed might be backed into a corner where maybe they have to destroy their credibility and do 50 basis points to tackle inflation. It needs to come down. Switching across to the QQQ, which is the NASDAQ, you can see we were in this channel ever since November, right? We were down channeling here as it had its pullback all the way down here, creating a double bottom pattern at 261 here on the NASDAQ. It then had its breakout. Fantastic. Have a breakout. Your price target should be the top of here. Look to the left, right? 333. But we're seeing some weakness here. Now, two things can happen, and it's happening at a critical moment. Either we're going to lose support from this green line, which is 295 here on the NASDAQ, in which case there's a big fall all the way down to support of about 11% on the NASDAQ. Or it bounces. If it can bounce and start working its way to 333, then we can see markets, including crypto markets, start to move in a positive direction. We know that Bitcoin is bouncing nicely from its EMA ribbon. It opened up the day here really positively. I mean, this intraday candle ran up as high as 24,000 today, but it's called back off $300, now sitting at 23,700. Bitcoin, if you go watch my video from earlier today, is not moving too much on just US news. It's taking advantage of what's going on in Asia because it's the Asian market that's doing the opposite. They're having upbeat manufacturing data and they're still being accommodative, introducing liquidity into the market. So make sure you go watch my video earlier to understand what's going on in the global map in terms of Asia. But from a US perspective, this is not good. This is a bad bit of data, and it gets us thinking that we need to be prepared. We need a plan B, because if inflation comes out that we cannot get control of it, if Feb is bad as well, then we can no longer just believe this narrative that, oh, it was just January, which was a seasonal adjustment, it's a blip, we're going to get back on it. And maybe there's a deeper issue of sticky inflation. Now, the one positive thing I will share with you guys is we have seen evidence, and I was speaking to course members about this, that there isn't too much of a wage price spiral going on. Remember, a wage price spiral is when wages are going up because of inflation. But because inflation goes up and then wages go up, guess what happens? Inflation goes up again and you get caught in this vicious cycle. But we're not currently seeing that. From some of the earnings reports we've been seeing, we're seeing that firms and companies are actually struggling to pass on costs to consumers. And this is an important narrative. Inflation only works if people like you and I have the savings and have the funds to buy it. If we stop buying it and we move our purchasing power elsewhere, those firms no longer have purchasing power. And guess what they then have to, pricing power. And guess what they have to do then? They have to take a hit on their margin. Okay, and that's where you start to see a breaking of this relationship where inflation starts falling, but wage prices can still remain quite high. That is a positive thing. Remember, Fed Chairman Jerome Powell says he's happy to see labor markets remaining strong while inflation is coming down. What we're worried about is if wage prices go up, and that keeps inflation up. So far, we're not seeing that, but we need to keep a close eye on that. So there you have it, guys. A huge flip and a huge blow to start off the Feb set of data. March is going to be a volatile month, as we expect, guys. And the key theme is going to be this. Was January a blip? Or have these issues now curtailed themselves into February as well? Don't forget to smash the likes. Don't forget to subscribe. As always, check out the links in the description. Don't forget to join the TA course, completely free, ijaz.uk/TA. If you're looking for something a little bit more, we do 3 times weekly member live streams, ijaz.uk/member for that one. You can cancel at any time. Thanks for watching, guys, and I'll see you in the next one.